Germany has long been considered an economic powerhouse, but even Europe's largest economy can benefit from improvement among its counterparts, as better exports help boost investor sentiment. Joining me down the line to share his insights is Dr. Nikolaus Siegfried from LBB. Dr. Siegfried, the latest ZEW report indicated sentiment in Germany rose to its highest level in 3.5 years in September, with good development on equity markets also playing a role. Current Chancellor Merkel has stayed optimism, saying that positive data at the moment no more than green shoots. Is this a sentiment you share?
Well, first at the ZEW, I think it's looking at analysts, that means looking at markets. So their part is very much driven by markets. So I prefer to look at the fundamental reviews, which is the IFO or PMI data. Also, the expectations part of the ZEW is almost flat. So I think it's probably the headline looks more optimistic than the overall details do. I think we have seen in Q2 a very strong base effect in GDP, but we have seen that growth is actually broad-based. Investment has been coming back, and also quite rarely for Germany, consumption has been relatively strong. We also see that the PMI now is solidly above 50. Orders are on a slight upward trend. The IFO is on an upward trend. Overall, I think we are seeing a bit more than just green shoots here, even though the export expectations in the IFO have been subdued. So I'm not sure it's going to be driven by the export this time, but much more domestically driven growth. France and Netherlands, which are very important export destinations for German exports, are very weak. So I think we're going to see growth, not very strong growth, but quite interestingly for Germany, more domestically driven growth.
Despite the positive data, low wages has been considered by some as the flip side to Germany's booming economy and one of the pivotal points of the ongoing election campaign. Do you think this could lead to problems of competitiveness moving forward?
I don't think so. I think that Germany had the lowest rise in unit labor costs in the EU and actually also in the OECD ex-Japan for the last 10 years. So I think a little bit more labor wage increases do not really hurt the German economy. I think the competition from China is not going to be based on prices but on quality, and I think that the other competitors have so much higher labor costs now that a bit higher labor costs in Germany will not be crucial for German competitiveness.
German bunds edged lower on Tuesday ahead of a two-day Federal Reserve meeting expected to launch the process of reining in US monetary stimulus. Some analysts are saying this is no more than a stabilisation than a sell-off, and discussions over peripheral tailwinds shall remain on the back burner until after the September 22nd elections. But what is your outlook for German bunds as we move through the tapering and euro recovery story?
I think on the recovery story, I'm a little less optimistic. I think what's going to support bonds is the periphery, and I think that's a topic that's going to pop up after the elections in Germany. We're going to see a bit more talk about Greece and Portugal, potentially also Italy with the Berlusconi discussion tomorrow. So I think that's on the margin going to support bonds. The tapering should depress bonds a little bit, but that's a topic for very much later. I don't think we're going to see true change in monetary policy before summer 2015, and I think it's going to be a little bit more volatile, but I would be slightly optimistic on bonds overall range bound around the 2% range, but slightly on the optimistic side.
Dr. Siegfried, thank you so much for your time and perspectives today. Well, viewers, we'll be keeping you up to date with those all-important elections, so please do keep clicking back to Dukascopy TV. Goodbye for now.